Welcome back. Let's use our new knowledge around marginal costing to solve a business problem. We're going to help a company understand its break-even point. And we'll do that in the context of the ACCA exam question that I have right here on my screen. And if we look at the task, what is the break-even number of pizzas for Mario's business? And to recap what we just talked about in our previous video, the x-axis represents our activity level, the y-axis our monetary values, our costs, and our revenue. And what we're going to do, we're going to understand the company's fixed costs, then their variable cost. Combined, that's the total cost equation. And then on the same graph, we can plot total revenue. And the point where total revenue is equal to total costs, that's the break-even point. And below that break-even point, we are in losses because our revenue does not cover our costs. Above that, we are in profits. Our total revenue exceeds our total costs. So we're going to help the business understand their break-even point in units, in number of pizzas. And in our last video, we learned about the power of understanding our contribution per unit. And to recap, that would be the selling price from which we subtract all of the variable costs per unit. And the difference is the contribution per unit. So we have a little template here, or pro forma. And we also talked about the formula to calculate the break-even point. And we said that would be the company's total fixed costs divided by the contribution per unit. Friends, I've just given you some hints here. Right now, it's a good time. Why don't you pause the video, try it on your own, then roll the video and we'll take it together. Welcome back. We learn about the small pizza business, and they also offer the delivery service. And we discover the variable cost to make and deliver the pizza, $2.15. Where would we plug that into our templates? Right here. $2.15. And the average price charged for a pizza is $6.50. See where this is going, everyone? I'm sure you do. And we need to get the total fixed costs. So we have rent and we have salaries. Notice they used the word salary rather than cost per hour or cost per unit. That's telling us that these two items are fixed costs and they do not change, they do not vary with the number of pizzas that we make. If we made no pizzas, we'd still pay the rent, we'd still pay the salaries. But let's read carefully, and we see that those salaries are in the $40,000 of fixed cost. Can we finish this up? Sure we can. So first thing we'll do, let's get the contribution per unit, which is $4.35. And then let's bring that figure here to our second template or pro forma. $4.35. And every time we sell a pizza, we have to pay $2.15. What's left over is my contribution per unit. And now that I have everything laid out, I can calculate that break-even point in units by dividing the fixed costs of $40,000 by the contribution per unit of $4.35, and we will get a break-even point of 9195, or 9,195 units. Ladies and gentlemen, that's how we use marginal costing to find the break-even point for a business.